Howdy, y'all. Welcome to Liberty Call. It is Friday, November 17th, 2023. Hope everybody's having a fantastical day out there. It is the end of the last full week before Thanksgiving, which is woohoo, very exciting. Went out and did a little shopping, got some of the Thanksgiving stuff for the week next week. Wanted to beat the traffic. And so I apologize for being, I guess about 2 hours late. So after the market closed, wife and I went out and had early dinner, lunch, and then we did a little shopping, and then we're back here. Anyways, all right. Well, we are here to wrap up the week. I got some economic data, market recap, and some other news. And looks like the markets were they were pretty much fairly flat for today. They were kind of in back and forth in the red and green, really hugging that midpoint. So anyways, if it is your first time watching Liberty Call, I'm glad you are here. Yes, you, sitting right there listening to me ramble. If you could do me a favor, yes, you again, if you could give me some thumbs up, a like, a share, a subscribe, send this off to a friend. They may find me entertaining. Probably not, but they could. And also press that notification bell because you want to know when I go live. All right, let me make this screen a little bigger so you can see it. And let's go ahead and get into today's numbers. Looks like the Dow was flat, up 0.01. 1 point. It was up, closed at 34,947. S&P 500 was up 0.13, closed at 45.14. NASDAQ up 0.08, closed at 14,125. The VIX fell 3.63 today. It's down to 1380. Canada was up 0.61. Brazil was up 0.11. And Mexico was up 0.41%. Over in Europe, Germany was up 0.84. The UK up 1.26. France up 0.91. The Netherlands up 0.62. Spain up 0.97. Italy up 0.82, Switzerland up 0.89, and Portugal up 0.53. Russian exchanges were split today. The MOEX up 0.54, the RTSI down 0.63. And the Asian markets, the Nikkei in Japan was up 0.46, Australia down 0.13, New Zealand down 0.32. In China, the Shanghai was up 0.11, the Shenzhen Component up 0.25%, China A50 down 0.39, DJ Shanghai up 0.13, Hang Seng was down 1.94%, and looks like the Taiwan weighted was not open today. All right, so it looks like for the most part, markets were pretty happy, especially in the European markets from the way it looks. Let's go ahead and jump over to the weekly numbers for the markets. Starting out with the Dow Jones, it's going to finish the week up about 1.92%. It looks like most of the jump was on Tuesday. The rest of the week was fairly flat. S&P 500, again, a very similar chart. Looks like it's going to finish the week up about 2.47. The NASDAQ looks like it's going to finish up about 2.79. Transports up 379, and the what are these? The Dow Utilities up 3.32. So it looks like everything. Looks like the Dow was probably the biggest laggard, but everything else, everything was up for the week. Again, a lot of that had to do with the Fed in the hopes of ceasing rate increases, but let's go ahead and zoom out and take a look at the longer trend. This trend begins last year at the beginning of 2022. Down most of last year, broke the downtrend in the fourth quarter. Sideways most of this year, and a little bit of an uptrend here in the early part of June. I would say that was most likely due to the hopes that the Fed was going to stop raising rates, which they may not. And if we zoom in here, we've had a nice little jump here in the last, what was that? I guess since the 27th of October, which was 3 weeks ago. So we've had a nice little run or a rally. Who knows how much steam is going to continue in this. So, all right, let's go ahead and get out of that. Shrink that down, reset. Okay, let's go ahead and get to the economic data that came out this week. Starting out with jobless claims, initial claims came in at 231,000. Forecast was 220. Last week's number was 218. Continuing claims came in at 1.865 million. The forecast was 1.847, so about 18,000 over forecast. Consumer price. Oh, this is the core. I grabbed the wrong one. Oh, that makes me mad. All right, well, we'll look at the core anyways. The core CPI number grew by 4%, and the month-over-month number grew by 0.2. So go look up the other one if you want. The producer price index grew by 2.4%. Forecast was 2.7, so a little bit more of a slowdown there. The month-over-month number was flat. Retail sales year over year grew at 2.48%. Last month's number was 4.05. And the month-over-month number was a contraction of 0.1, better than the forecast of negative 0.3. Industrial production year over year contracted at 0.68. Last month's number was a contraction of 0.16. The month-over-month number was a negative 0.6 contraction. And let's see, your forecast was 0.3, so a little over forecast there. And last, housing starts came in at 1.372 million. The forecast was 1.345 million. So a little over forecast. Last month's number was 1.346. So about 6,000 more. And then the month-over-month number, housing starts grew by 1.9%. Last month's number was 3.1. So the numbers look pretty decent. Again, it's not, we don't have complete catastrophe. I mean, it'll happen at some point along this downtrend, but as of right now, again, it's a lot like 2007 going into 2008. There were problems. You could see it in the market. The yield curve at the time. Granted, the housing explosion that occurred at the time. So there was a lot of stuff going on. And if you really weren't taking a 30,000-foot view of things, you probably would have missed a lot of it, which, based on a lot of the people that I've seen over the years, they missed it. So anyways, all right, well, let's go ahead and get into the market recap for today. Dow notches third weekly win on optimism for peak Fed rates. All right, let me get my notes here. All right, the Dow closed flat, securing its third consecutive weekly gain, while the S&P 500 and NASDAQ posted over 2% increases for the week. Slowing inflation data earlier in the week fueled optimism that the Federal Reserve rate hikes may have peaked. Gap experienced a more than 30% surge in its shares after reporting Q3 earnings that significantly exceeded analyst estimates. Goldman Sachs attributed the beat to a significant acceleration in trend at the Old Navy brand and broad-based margin outperformance, end quote. Ross Stores also saw a boost, surging over 7% with better than expected Q3 results and improving margins. However, BJ's Wholesale Club declined 4% despite beating earnings estimates as revenue met expectations. Treasury yields slid, contributing to the overall market's positive trend as investors held on to hopes that the Fed's interest rates have peaked. Weekly jobless claims rose and U.S. retail sales fell for the first time in 7 months in October, indicating potential slowing demand at the beginning of Q4. On the housing front, October housing starts slightly exceeded expectations at 1.372 million, while building permits were higher than expected at 1.487 million. Microsoft shares fell over 1% after the departure of OpenAI CEO Sam Altman, causing a loss of confidence from the board. Amazon announced job cuts in its Alexa business, but closed more than 3% higher, defying a broader tech sector decline. Some on Wall Street foresee further tech gains, anticipating an acceleration of spending in cloud and AI in 2024. Energy stocks rebounded over 2%, recovering from losses earlier in the week, driven by a jump in oil prices. However, it wasn't sufficient to prevent a fourth consecutive weekly decline due to increased supplies and concerns about global demand. Marathon Oil, APA Corporation, and ConocoPhillips were among the notable gainers. All right, so everyone's finishing this week in a happy mood. I mean, the government avoided the shutdown because those lazy bastards didn't want to have to work next week. They wanted to, fly home to wherever they live and, enjoy some time off like they actually do anything. So, all right, next up, U.S. housing starts rise moderately, tight supply supporting new construction. In October, U.S. single-family home building saw a marginal increase, suggesting that activity may remain moderate in the near term due to higher mortgage rates. Home builder confidence hit an 11-month low in November. However, a shortage of houses on the market supported new construction as permits for future single-family home building rose to the highest level in nearly a year and a half. Single-family home housing starts, which represent the majority of home building, inched up 0.2% to an annual rate of 970,000 units in October. Despite the modest growth, permits for future construction of single-family homes increased by 0.5% to a rate of 968,000 units, the highest since May of last year. The increase in permits was concentrated in the Northeast and West regions, while the South and Midwest saw declines. Higher mortgage rates have impacted the housing market, leading to a decline in home builder confidence. The National Association of Home Builders reported that builders experienced expected lower sales over the next 6 months, with mortgage rates remaining above 7% since mid-August. The rate on the 30-year fixed mortgage averaged 7.79% in late October, with the highest since November of 2000. However, it has since retreated to an average of 7.44% this week. Analysts suggest that mortgage rates could decrease in the coming weeks, given the decline in the yield on the 10-year Treasury note. While single-family home building is supported by a low supply of homes on the market, the multifamily housing segment saw a 4.9% increase in starts to a rate of 382,000 units in October. However, with a substantial stock of multifamily housing under construction and rising rental vacancies, significant gains in this segment are limited. Yeah, a lot of people just can't afford to buy a house right now with the current rates the way they are, the way prices are disjointed because, everyone moving around. I mean, I guess if you want to move to like Detroit or Blue City, you could probably find something real. Well, maybe not all blue cities, because like Denver, just a little north of me is, people want to move there all the time. But I mean, they still have all the same problems that most blue cities have. All right. Overall housing starts rose 1.9% to a rate of 1.372 million units in October, beating economists' forecasts. Permits for future construction increased 1.1% to a rate of 1.487 million units, with the multifamily segment rebounding by 2.2% to a rate of 469,000 units. The housing under construction dipped slightly, while the inventory of single-family housing under construction decreased to the lowest level since May of 2021. So again, good news. All right, let me get that off the screen. And where's the last of my notes here? Here it is. Forgot to put them here in my Word document. Don't want to sound stupid or anything, do I? Nope. I do that all by myself. Just ask my wife. Anyways, all right. One last article coming our way. Let me put it on the screen. Comes from Mises Institute, their Mises Wire, titled Cryptocurrency, Integrity Destroyer or Policy Scapegoat. And this was written by Matthew Pan. All right, here's my notes. All right, cryptocurrency is under scrutiny as recent events, including the collapse of the Three Arrows Capital Hedge Fund, have exposed integrity issues within the crypto landscape. I would argue that it's not necessarily the crypto's the problem. It's the people running the exchanges like FTX, that Sam Bankman fraud guy. Yeah, I mean, it's the crypto is, Bitcoin itself. I mean, you can't counterfeit it. I mean, there's only so many coins out there. There will only be so many coins out there. So anyways, where was I? Su Zhu, co-founder of the failed hedge fund, was arrested, revealing a $3.5 billion creditor's claim against the fund. This incident, along with other controversies like the JPX scandal, the 2022 crypto crisis, and FTX's troubles, have contributed to growing concerns about the safety and reliability of cryptocurrencies. Again, I would stop and say, I don't think it's the currencies. I mean, yes, there are some what they call shit coins out there, which are just, they're not worth anything. They're only worth, the frenzy of people buying them. But, things that don't have a way to, grow them arbitrarily, like the money supply, like the dollar, things that, can't be monkeyed with, I find very reliable. Now, again, the exchanges, there's where your problems might lie. Let's see. A recent poll indicated that 75% of Americans familiar with crypto lack confidence in its security. Policymakers globally are focusing on regulating the crypto industry. I don't remember asking them to do that, as evidenced by actions taken by the U.S. Securities and Exchange Commission against Binance and Coinbase. Bipartisan efforts on a bill to establish crypto market secure rules are also underway. Meanwhile, the battle over the Federal Reserve's central bank digital currency adds to the challenges facing the crypto sector. And again, let me stop here. The Federal Reserve has no problems with creating a digital dollar that they can turn on and off. Look back at the the trucker protests up in Canada a couple of years ago. What did they do? They turned off their banks. I mean, do you really want that sort of thing happening to you if you somehow, and I know people, well, I wouldn't do anything to ever get on the wrong side of the government. Yeah, just wait. And one day there's going to be something that you find objectionable, and you're going to say, no, I'm not going to consent to this. And, they'll come for you too. All right. The article argues that while integrity issues and individual actions, such as those involving Su Zhu and Sam Bankman fraud, are highlighted, macroeconomic factors play a significant role in the challenges faced by the crypto market. The past decade has seen crypto market fluctuations aligning with periods of loose or tight monetary policies. The article points out that the correlation between the Federal Reserve actions, interest rates, and Bitcoin prices. The macroeconomic analysis suggests that the recent troubles in the crypto market are linked to broader economic conditions, including quantitative easing and tightening, interest rate movements, and contagion risk between crypto and traditional finance. The article emphasizes that blaming integrity issues alone may shift responsibility away from larger economic factors, portraying cryptocurrency as a scapegoat for broader economic challenges, like inflating the currency. In conclusion, the article asserts that decentralized cryptocurrencies aim to restore stability by allowing the market to regulate money. However, under the Federal Reserve's expansionary policies, monetary stability has been replaced by instability, boom-bust cycles, and pessimism. The article suggests that while cryptocurrency has its development risks and some players may engage in fraudulent activities, blaming the entire industry's challenges solely on integrity issues ignores the broader economic context and shifts responsibility away from policy failures. I agree. Again, it'd be like blaming, if we were trading, gold and silver pieces for, all of our daily goods. And, it would be like blaming, your silver dollars for why someone's a thief. I mean, it's an inert object. It has no, it can get stolen and things like that. But, it's not the money's fault that people are criminals. That's a choice they make. And, it's just the way it is. Anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you guys next time. And have a good weekend. Bye-bye.